Welcome to Rich Dad Stockcast with Andy Tanner. And today we're going to do something a little bold. We are going to tell you what to do. I'm just kidding, Andy. I'm kidding. But we are going to
Give
say...
me a heart attack.
I know, right? That's the fun of the show. The my three reasons, Andy says there's 100 million, why you should be investing in the stock market today. And if you listen to last week's show, just to clarify, investing is different than trading. If you're uncertain what I mean by that, maybe check out last week's show. But Andy, there are three main reasons I believe why we should get everyone we can involved in the stock market today.
Okay.
Would you like to hear my first one?
I would love to hear all three.
Okay. The first one is actually my I'm going to say my favorite. I have two that I just love, and that's scalability. Because when I first started investing in the stock market, I was scared. I'd done my studying, I'd taken my course, but I was scared. You know, doing is different than studying, and
Yes.
and so because of the stock market, I got to start out with a very small amount of money, so small enough that if I lost it, okay, I'm not going to take my wife out for dinner for 2 weeks, but it was good enough to get me comfortable, and the education when I got to invest with that small amount of money was incredible, and it really gave me the courage to go bigger. And so I want to throw that at you, that I think scalability is one of the greatest things about the stock market.
Yeah, if I could begin with this foundation, when people say, Andy, should I get into real estate? I always say, what do you know about real estate? People say, should I get into stocks? I say, what do you know about stocks? So the education piece. And when we talk about an asset class broadly, we can be in trouble because there's a lot of really bad properties out there right now. There's a lot of great ones. There's a lot of really bad, bloated, overpriced stocks out there right now. There's a lot of good ones. So the reason I think you want to be in any asset class is I don't think you say, oh, get in real estate right now. That's a winner. I think your ability to analyze each project individually with your education helps you segregate the winners from the losers. What's really nice about stocks is exactly what you said. I had a paper trade account when I first started, and I thought, okay, I'll practice on paper first, and I'll go and I'll practice for a long, long time, then I'll feel confident, and then I'll switch to real money. Didn't work out like that. I started with paper for sure, but I started putting in real money way earlier because I realized, wait a minute, I can buy 10 shares here, $16 a share. I'm in $160. Shoot, you spend that going through the drive-through nowadays. So you really can begin to participate, gain experience, and find individual companies. I don't like the idea of buying a mutual fund and being in the stock market. I really like the idea of individual business ownership at a scalability. I could never, ever go in my garage, to your point, Greg, and build one of these. I couldn't. If you lock me in the garage and say, don't come out till you built one, I'm dying in there. It isn't going to happen. But the fact, someone like Steve Jobs would share his accomplishment, his brilliance, his innovation, his leadership, his technology, the fact he would share with this, I'm going to cut my company up into shares like a pizza, and I'll let you buy a share, and I can be an owner with him side by side. I can be next to Warren Buffett. Well, I don't have $300 billion like Warren Buffett does, but my sons can scale in and get something like this. So pretty amazing on the scalability. I have to agree with you there. Looking at, if you want an asset and you want to build your asset column, and you want something that can cash flow, because you can buy a silver coin, it won't cash flow, but at least you have an asset. Well, here in the market, you can scale down, buy a business, or at least buy part of a business at a wonderful price. I think that's worth looking into stocks. I'd agree.
So I'm actually really glad you brought the silver coin, because it kind of leads into the second one. I'm going to save this, the badass one. I don't know if you can say ass, but I'm going to save the badass one for last. But
PG-13, we're okay. We're okay.
Yeah, I think it's on television now. But I'm going to throw the word out, liquidity. But the reason that was important to me is you mentioned a silver coin, and early on, when I started at Rich Dad like 17 years ago, we'd have our company meetings with Robert, and he would really stress, you really need to get a silver coin, just one, because it makes you interested. It makes you start watching.
Yes.
And I'm an idiot, right? So
Involved.
yeah,
Yeah.
But so I didn't want to just go get one coin, right? I wanted to get as many coins as I could because I was all in. And so what I did, I thought I was really smart, is I went on the stock market and I bought as much silver as money I had, right?
SLV, ETF, yeah.
Yeah. So long story short, totally butchered that, right? The price of silver went down, which who cares if you had the coin because eventually it's going to go up. But when you're a young kid and you're in the stock market for, the first time, you're all jazzed and then it starts to tank. And so suddenly you realize, oh, shoot, this isn't as easy as I thought. And it was okay because I got to pull out. As soon as I realized I had made a mistake, I got to get out of there within like seconds. Sure. And so I really want you to kind of explain what liquidity is, because had I done that with gold coin or silver coins, I couldn't have just in 10 seconds saved myself. I would have had to go to the store. I would have to sell them. I would have paid fees. It would have been a process. But with the stock and liquidity, bam, I got right out as soon as I realized I made a mistake.
So this is huge to understand. And if you want to do some light reading on it, Warren Buffett, he releases his Berkshire Hathaway letter to shareholders every year. The 2021 is one of his best. I really loved it. And it talks about liquidity. Actually, one of my favorite paragraphs he's ever written is what liquidity means is it's very easy to buy and sell stuff, to either take the cash and turn it into an asset, or take the asset, sell it, and liquidate it and turn it into cash. And when someone's going out of business, they say liquidation sale. That means they want to get cash. That's another way to say liquidation. And one of the great advantages of stocks that Buffett often talks about is there's a detachment emotionally, because we have people that play the stock market. They're all about fear and greed, and they're all fixated on the price. And when you have an event like COVID or any type of black swan or even little dips because of emotion, some news comes out, these prices drop, and often you can find value there in what Warren Buffett calls the shooting the fish in a barrel experience. And he said, you never get prices like this that you could just liquidate and make that trade quickly, either in or out, and you pick up massive bargains. Most big business deals that are outside the stock market are done by negotiation. So if I were to buy your restaurant, for example, I'd look at your financials, I'd look at your customers, I'd look at, the whole package, and you would demand top dollar because we'd be really talking about the quality of the business. But in the market, it's so liquid, things go up and down. The downside is volatility, you get things moving a lot. But I would agree that he also says in that very paragraph, he says, it is also easy, to your point, to exit from a mistake. So the paragraph kind of starts out, he says, it's almost chiasmic. He starts off saying, I make many mistakes. Our businesses, some have great economics, some are mediocre, some are pretty good, some are marginal. But he says the beautiful thing is you can actually exit from the mistake in the marketable arena where it'd be hard. In COVID, I had some money in some syndications. And in COVID, they quit paying. I was never going to sell them.
So hold on. Syndication is a real estate deal.
Yeah, it's like buying stocks, and it's like ownership. It's you own a share of a project instead of a share of a company. It's the same thing. I'm a shareholder, a stakeholder with other investors in that real estate project. And they quit paying because people quit paying rent. I never would have sold that, but I couldn't have because it's not liquid. Right. Once I get into syndication, it's unless it's written in the fine print, it's very difficult. It's much more difficult to liquidate that than to get in and go. It's going to be a negotiation somehow with a person rather than just clicking a button and being out and being in cash. So I really do love the liquidity. I don't trade stocks up and down. I don't use that liquidity for that reason. But like Buffett said, if you make a mistake, you start saying, boy, this goose isn't laying eggs anymore. You sell that goose quick.
Right. So I got two comments. One, do you know in every episode you tell us someone else to read? I think Last week, Benjamin, I don't remember his name. This week, you're saying
Benjamin
Warren
Graham,
Buffett. Everybody
Warren
in the
Buffett.
audience,
Not
read
bad guys
Andy's
to
book.
read.
It's in the show notes. Read Andy's book in the show notes. He's too humble to even mention that he's got like 3 books. One of them is free. It's in the show notes. Jeez, Andy, come on.
That book was really fun to write because it's one of those labors of love type thing, because I think when someone reads it, they get such a great idea of how to build a blueprint for their dream, and actually build the blueprint for it with using a financial statement. Those 6 numbers of the financial statement are wonderful. I should say 2/3 of the balance of the financial statement, the balance sheet and the income statement. There's 6 numbers on those, and change your life, man.
So read his book. The other thing I need to say is hit subscribe, notifications, leave comments. And then finally, I do think you touched on it really briefly, but I think one of the dangers of liquidity is that you might think you made a mistake too soon, and you might kind of be a chicken and bail out too fast and let emotions control your investing rather than your education. Would you say that's accurate?
Yeah, liquidity. You want to have a plan. First thing, you decide what you want the investment to do. Do you want a cash flow, which is my preference, a hedge, which is also a preference. I have friends that trade very, very well. We can teach people how if they want to, but you have to decide what you want to do with that. And particularly on the trading side, we call that an exit strategy. And often you got to give yourself a little room. When it dips and goes without you, they call that whipsaws. There's a name for it. So yeah, that liquidity, all of these things, liquidity brings volatility. And with every opportunity, there's also pitfalls. And that's why we're education advocates.
Yeah, there you go. Well, okay, now that brings us to the third one. By far, from an investor standpoint, the coolest one. By far. But I don't want to ruin this. I'm even going to tell you, Robert Kiyosaki would say this is cool. And it's actually fairly unique to stocks. I'm not going to say the other asset classes can't. But this third one that we're going to talk about in just a sec, this one is, to me, easiest done with stocks, and it's so powerful if you're an investor. So we'll talk about that one right when we get back.
All right.
All right, welcome back to the Rich Dad Stockcast with Andy Tanner, and he is going to talk about the third reason why you and the audience should be investing in stocks today. That's going to make Andy just cringe. I don't know if you can see his face right now, but he hates it when we say what you should do. But I'm saying why the third reason why you should get in stocks today. Oh, by the way, not financial advice and things like that nature, because we don't know you or your education level, blah, 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 blah. Hit subscribe, comments, and there you have it. Andy, in my opinion, as an investor, not a trader, but as an investor, I think maybe the most unique thing, the coolest thing about investing in the stock market is the agility of the stock market, where I want you to talk about this, but I just want to brag a little bit, where you can make money when the stock market is going up. You can make money when it's doing nothing and just flat, and you can make money when the stock market's crashing. And that is just, tell me another, I know you don't like comparing asset classes, but come on, that is just the coolest thing, and it's unique to stocks, and it's, I don't want to say easier to do with stocks, but it's doable for even, a beginner investor, someone like myself. So can you just kind of explain the agility?
Yeah, we have a couple of different positions we can take. We can take a long position, which benefits from prices going up, short positions, which benefits prices going down or value going down. If I were to defend other asset classes, I look at my real estate. I always use debt to do my real estate, so I'm shorting the U.S. dollar. So I'm taking advantage of a drop in the U.S. dollar. If I borrowed money, I'm going to pay it back with dollars that are worth less. But I do agree with you is that stocks are a very simple and easy way to benefit from down moves. I don't do a lot of that, but I do a lot of short options, tons of those. I sell options on the short side all the time. Like, you would never meet me or talk to me where I wouldn't have a short position on options. I love those, because though their value decays with time. right? And when the value goes down, you want a short position on that. So I'd agree. It's probably the easiest way to take a short position is in paper. But I would say, you know me well enough how I cringe is when we say, well, people should get into stocks right now. My mother shouldn't. My sisters shouldn't. One of my little brothers shouldn't. The other one can do it. He knows a little bit. But it really is, what it makes me cringe to say, people should get in real estate right now. I says, well, what do you know about it? Because I would never recommend my mom do the stuff I'm doing, ever. So I always am hypersensitive to bringing that back to focused on the investor rather than the investment. So when people say, oh, 3 reasons to get in stocks. If you don't know how to use liquidity, if you don't know how to use that agility, if you don't understand the benefits, that scalability, those 3 you talked about, then you probably shouldn't get into stocks because you don't know what you're doing.
Yeah, I agree. Honestly, I say that just to cause a little bit of pain in you, just a little.
Yeah,
What I
you know how to get me.
yeah.
Yeah.
What I should say is 3 reasons to get financially educated about stocks.
I love it.
But that's not, no, yeah. See, that's not fun. Yeah.
Yeah, but you're not going to get my dander up with that. So
No,
I'm
no,
right in sync with you
cool.
there.
But I do want to clarify.
And there's more than 3. There, we've talked about 3, but there's the leverage of the options market, right? There's the ability to own huge behemoth. What's Apple got, a $2 trillion market cap or something? I can participate and go shoulder to shoulder with some of the strongest companies in the world, and I get to participate. So there's a lot of cool reasons to learn about this asset class.
To get educated about this asset class.
Yes, sir.
I do want to clarify though, when we were just talking about agility, and we mentioned that you can make money when it's going up. We're not just talking about buying low and selling high. You can make money when it's going up with your
sideways down. Yeah, dividends are going to get.
Yeah.
A great one is I mentioned in our last podcast, ExxonMobil. Look at the swings in Exxon. You go from $80 down to the high 30s, all the way up to nearly flirting with 120. I mean, what a roller coaster. But you can make money with it. Like even in real estate, let's say that, the Zillow sends me these reports on the houses that I have, right? I always get these things. Oh, it's up, it's down, it's up, it's down. As if I cared, because the rent, that comes in up, down, and sideways. Well, same is true with stocks. You can make money up, down, and sideways if you know how to cash flow and if you understand the options market a bit.
Can you use like call options to make money when it goes up?
You bet. Yeah, I actually have short calls all the time, and this gets a little granular, but I look at stocks prices moving in 5 ways: up huge, up a little, sideways, down a little, down huge. And a lot of the calls that I sell, the market can go in 4 of those 5, and even 5 out of 5, and I can still make money. I don't like the up big. I don't like losing my investments, so I have to roll up a bunch of fancy jargon we don't need to get in here. But yeah, 4 out of those 5 directions, about 90% of the time, you just collect the cash flow, and it's that 10% of the time you got to know what you're doing. So it's fun.
Right. That's really cool, and it is amazing. But I think the agility, we talked about liquidity, we talked about scalability. Those liquidity maybe, but those take less emotion or less education.
Bring a lot to the table.
Takes emotion, yeah. But agility requires education. I mean, they all do, but not to scare you there.
Bet.
Agility requires a higher level.
A lot of people don't like to. I have a hard time always playing the downside, but I'll tell you what's really nice is if you can do what we call beta weighting, and you can look at a market that's starting to tank, you can make investments that maybe less opportunistically, but defensively, where those investments make a ton of money as the market falls to help balance. As the account balance drops here, those investments go and they even out and they hedge. So there's tremendous opportunities by understanding the agility and the ability to put money in something that makes you more money if the asset value falls. But the easiest one is options, because the time decays. So we know they're going to be worthless we know all of them are going to be worthless someday because after expiration, I'm not going to make money on last month's options ever. So the time decay is a huge benefit.
So let me throw another one at you. And you and I don't know that we've ever on any of our shows talked about this, but one of the things that when you were teaching me about stock investing, not trading, when you were teaching me that skill set, we would go in our brokerage account and you would teach me how to the brokerage computer program could assess my risk level, which was incredible.
Somewhat.
And
somewhat.
so, yeah, I saw that really like a bonus benefit of getting in the stock market, because you have a computer program that can see, all sorts of things that I can't see. And it can tell me, I'm not going to say it's 100% accurate, Andy. And if you could explain this a little bit.
Yeah.
It gives me a percentage of my risk and basically my success. It's a really nice feature of stock trading.
Yeah, there's no guarantees. There's nothing foolproof. We know that. People are adults. They get that. When we go into an investment, good idea is to have three things. Number one, you start with reward. If you have a wealth plan that wants to take you to a dream, you get an idea of what type of returns you'll need to get there. And if a 401k isn't doing it, and there's not enough reward there, why participate? Why get into something without an idea? If I'm going to build a house or building, I've got a blueprint that tells me, I shouldn't be surprised when it's done. I should say, yep, it's exactly, pretty much what I was looking for. So having that reward first lets me know whether it even gets my attention or not. So reward is first. The second thing is risk. Now that's even bigger, right? And risk has to do a lot with how much is at stake and how much control I have or don't have over that investment. Then the one that you might have been alluding to a lot, because they get commingled with the risk a lot, is probability. In other words, what's the probability of outcome A, outcome B, outcome C? That's not a perfect science, but we can use computer models. An insurance company uses someone called an actuary, where they say, all right, here's San Francisco, and here's the density of the population. This is what their streets look like, and this is the average make of car, and this is the historical amount of accidents and the volatility that we expect. Okay, now we know what to charge. We know what our risk is. We know what our likelihood of, auto accidents are, and you run those numbers. It's not going to be on the dot perfect, but it's certainly, there's a reason. It's like a weatherman, or a weather person, a meteorologist, to be correct, I should say. Like a meteorologist, they'll say, hey, 20% chance of rain. Sometimes they're wrong, but at least you think, okay, well, I'll probably take an umbrella and my sunscreen that day. Be ready for both.
Yeah. I just thought that was, when you showed that to me, it
cool.
Going back to the emotional, it really helped my emotion. It helped my confidence. It just made me overall feel better that it wasn't just myself thinking this was a good idea, but hey, look, the probability
there's some
chart.
Data, there's some reasons.
Yeah. So I thought that was really good. And anyone who's watching, anyone in the audience, if you've taken Andy's 4-pillar course, his favorite, I would say the pillar he's most focused on. Well, there's two: cash flow, but risk. He is all about risk management. It's one of the reasons why, like, I can tell every single person I know, go study with Andy Tanner, because I have so much
plug
confidence.
Me great.
No,
I'm always embarrassed because you're always plugging me so nicely. So thanks for your kindness.
No. But I mean every bit of it, because you focus on cash flow, and that makes you the perfect person for Rich Dad and Rich Dad investing. But the risk management, man, that's just like the confidence that brings when you understand how to manage your risk.
Yes.
You can't beat it. And I don't know, I don't hear anyone else talking about that. So I thank you for
that. There's an old saying that there's old investors and there's bold investors, but there's no old, bold investors. We need to manage the risk. So for sure.
Yeah. Well, thank you. So let's wrap this up. We had liquidity, which I'm going to put more as an emotional benefit, with requires a little less education. We had agility, which to me is heavy on the education side. I think you're going to agree with this. We had scalability, which again, you really got to check your emotions here. I'm going to say education too, because you don't want to go too fast. You got to make sure you know what you're
Always.
doing. And then
Always.
the risk management and what you're calling probability as well.
Yeah, a lot of great stuff. It's fun to be an investor. It's fun to be in a time where it's so opportunistic. There's so much out there, so many good things coming. I think the rich will get richer and the educated will get richer. So it's
Well, I'll
fun
tell you
time
this,
to
and
be
then
involved.
we'll sum it up. The reason I wanted this one to be called 3 Reasons Get Into the Stock Market Right Now is because I truly believe the agility that no matter what the market's doing, you can turn
You
that
always
into
have
your
an
favor.
opportunity.
Yeah. And I
Yes,
just
you
think
do.
that's-
You always have an opportunity. Yeah, I'll do the subtitle, 3 Reasons to Get Educated on Paper Assets.
We'll talk to
That'd be my
Sarah.
preference title.
It's not
All
a
right.
sexy. Well, hey,
I
thank
know.
you very
People, hey, we live in an advice world. People want to know what to buy. If you want to really be smart, learn.
Yep. Thanks so much, Andy. We'll see you next week.
You bet.
All right.
This podcast is a presentation of Rich Dad Media Network.